There is one account which can beat every single bank. Can you believe that? Let's talk about this. Hi, this is G. Welcome back to Tax-Exempt Millionaire Club. If you're not a member of our TMC Tax-Exempt Millionaire Club, feel free to scan the QR code so you can join a group of like-minded people, which we all seek that financial freedom with tax-exempt in mind. Let's talk about the last topic for self-directed Roth Solo401k. That is the one I mentioned. It can be every single bank. Why? Let's discuss it. First of all, it's Roth. What does Roth mean? Your after-tax money in, tax-free growth, tax-free withdrawal. So once every self-direct dollar goes into this Roth account, it could be Roth IRA, Roth 401k, Roth Simple IRA, or even Roth SEP IRA. Once you have those Roth accounts set up, every single dollar you will contribute to the Roth account, there's no more tax. We all want that, right? No more income tax, by the way, just want to clarify. The second main reason is a very high contribution limit. If you go back to our theory number 2, by now you know 70,000 is upper contribution limit. If you are below 50, there's catch up, there's even additional contribution for people aged from 60 to 60. Compared to a regular solo 401k, in this year when I record this YouTube, it's 7,000 per person. So it's 7,000 versus $70,000 or even more. So you can see the big difference. We want to contribute as much as we can. Remember, once that dollar is inside a Roth account, you don't need to worry about tax anymore. It's already taxed and it will grow tax-free and withdraw tax-free. The next point, we're doing the self-directed Roth Solo 401k. We want to use that money for alternative investments, such as real estate or buying and selling businesses. So this gives us some leverage as well as a huge risk control compared to your money is dollar by dollar in the stock market. We all know how volatile the stock market can be. By the way, if you don't know, the money can be invested in private note, invest as LPs, limited partners, tax liens, EMD funding, transactional funding, or even cryptocurrency. Of course, not every single company will offer that. You have to find out the company who will allow self-directed Roth Solo 401k to invest in crypto. Last but not least, this is my favorite because as a real estate investor, I want to have leverage when it comes to self-directed Roth accounts. There is a terminology called UBIT, unrelated business income tax. This will be created if you leverage. For example, in your account, if you have 100K, but if you want to buy an asset with 200K price tag, you can go to some banks. Your points will be limited, but there are banks who specialize in helping the lending for self-directed accounts. You can go to them and then leverage 50% in this case, and your self-directed Roth Solo 401k will still be the owner. You will contribute 50%. The other bank will contribute 50%. In the eyes of IRS, that 50% leverage will not be subject to the UBIT we just mentioned. If you do this outside Solo 401k, the UBIT will apply. Basically, if you only contribute half of the purchasing price, the other half is from other banks or financial institutions. If your net income, for example, if it's 10,000 for the year, you will have to pay 50% of that income, which is called UBIT, unrelated taxable income. And that income is treated as a trust income. So you have to file a tax form 990T to capture everything. By the way, just a quick disclaimer, I'm just sharing everything I know, my experience investing in real estate, utilizing different strategies. I'm not a CPA, not a financial advisor, not a tax attorney. All content should only be used as entertainment or educational purpose. Coming back to the self-directed Roth Solo 401k, there are so many advantages to utilizing this self-directed Roth Solo 401k as one of the tools in your toolbox. But there are some crumbs. As the episode 1, we talk about who will qualify. Not everyone will qualify. You have to be self-employed and you should not have anyone under W-2 under payroll. Another thing is there are some prohibited transactions, which is also another terminology called disqualified person. You should not do any transaction with disqualified person inside of your self-directed Roth Solo401k. I hope this episode gave you some insight about how you could use self-directed Roth Solo401k to fund your real estate investment. Everyone's different. Everyone's experience and risk tolerance is different. Find out the one which is the best suitable for you, and happy investing in your journey. As we always said, don't let banks, taxes, and all-day advice limit your wealth. Join our TMC Tax-Exempt Millionaire Club today. Own your bank, own your wealth, your future, all tax-exempt. I'll see you at the next episode. Bye.